Tesla's, been a real leader in this and had great numbers in the fourth quarter. This year is going to be a year of execution, and we're going to see who really has real products and can actually make them.
Rivian was down by more than 15%. Then you had companies like Fisker and Lordstown and Tesla all down by more than 2%.
With a bunch of these startups, you really have to watch them, begin to ramp up to get comfortable that the products are moving forward.
I don't think it's fair to really put Tesla in the same category with a lot of these new startups. Tesla seems like it has kind of proven itself, and it's going to be in a different set of category. Would you agree with that?
In this video, as the stock market continues to irrationally panic, Tesla stock is now cheaper than it was before the company reported their stunning blowout Q4 delivery results. Go figure. A top-ranked stock analyst remains skeptical of EV startups who have yet to prove anything and warns that the slow, bureaucratic culture of legacy automotive manufacturers may be their downfall as they attempt to transition to EVs. We'll also hear what he believes to be the key limiting factors for growth in the electric vehicle market in 2022 and his top stock picks in the EV space besides, of course, Tesla. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. First order of business, surprise, surprise, Tesla stock down again. The stock losing over 3.5%, down almost $40 today, closing just over $1,000 per share. Once again, to put this in perspective, after Tesla's blowout earnings results where the stock peaked around $1,200 per share, the stock is now down 14.4%, down $173 per share. Tesla has literally given up all of the gains since their stunning blowout Q4 result and then some, down $30 since before the blowout quarter was announced. At the risk of sounding like a broken record, as I said in yesterday's video, does this make sense? No. Now, I know many of you are getting sick of hearing me beating the drum on this. Tesla stock's too cheap, blowout quarter, the stock's going to go to the moon, the price target upgrades, the earnings upgrades, the delivery estimate upgrades, blah, 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 blah. But I wouldn't be able to live with myself if I didn't let everybody know. And why is that? About 1/3 of the people watching this channel, that's 1 out of every 3 people, isn't actually a regular viewer and or they're not subscribed to the channel. So there's a lot of new folks watching this content for the first time. That being said, some of the people who watch who aren't subscribed just find me incredibly abrasive, yet for some reason they can't stop tuning in. So please forgive me, sometimes I do have to repeat the same shit over and over and over because there's plenty of new people watching these videos and I don't want them to misunderstand what's going on or be scared out of the stock or miss the enormous buying opportunities. So let's move on.
Electric vehicle stocks took a big hit yesterday during the market's sell-off as EV competition takes off. This comes after Amazon announced a new deal with automaker Stellantis. Joining us right now is Oppenheimer senior analyst Colin Rush. And Colin, 2021 was the year of the EV. What about 2022? What's that going to be?
This year is going to be a year of execution, and we're going to see who really has real products and can actually make them.
This is a deceptively insightful comment from Colin here. In 2022, we finally get to see some of the EV startups and legacy automotive manufacturers who've been doing a whole lot of talking, telling us what they're going to do, creating computer renderings, taking pre-orders for products for which there isn't even an existing prototype. Now, just between you and I got a funny feeling we're going to discover a lot of these EV startups and legacy automotive manufacturers can't deliver on their promises, either falling massively short of their production targets, or needing to raise incredible amounts of capital because they can't make these vehicles as cheaply as they thought, or a combination thereof. And I also suspect there may be more SEC and DOJ investigations into claims made by many of these companies. Stay tuned for that.
There's a bunch of interesting products that are coming to market, and it's a major transition from a technology perspective that we're expecting here in 2022 from a manufacturing perspective. And so a lot of these traditional OEMs moving into a new technology node, as well as some of these startups that are going to ramp up. And I think that's what we're really watching this year. And certainly Tesla's been a real leader in this and had great numbers in the fourth quarter that signaled to the market that there was some good news coming, but there's a lot of execution coming this year.
Rivian shares down more than 15%. That came after the news that Amazon was doing that deal with Stellantis. What does that tell us in terms of the legacy automakers who are gearing up with EVs versus these startups who are trying to just go it from a brand new platform.
I can handle this one, Colin. What this tells us is many, not all, but many of the people investing in Rivian stock are doing so based on hopes, dreams, delusion, and potentially some degree of brain damage. It should be painfully obvious that Amazon will partner with numerous companies producing electric vehicles to transition their fleet. They have a huge logistics business, okay? One partnership isn't going to cut it. Putting all their eggs in one basket isn't going to cut it. And besides that, they're going to need more vehicles than a company like Rivian can supply. So this shouldn't have come as a surprise to any Rivian stock investors. The fact that the stock sold off about 15-16% on this non-news just goes to show the lack of thinking many of the Rivian stock investors have done. Here's another spoiler about Rivian. They're going to miss their production targets this year. Production's harder than they expect, so you should see that one coming too. The stock shouldn't sell off when they announce they've fallen short of their production goals this year, whenever that happens, whether it's Q1, 2, 3, 4. It shouldn't come as a surprise because production is hard, but I guarantee it will, and the stock's going to fall off a cliff when this happens. Count on it.
You know, when we look at this and the move towards net zero kind of across the board in multiple industries, it's going to take all hands on deck. And I think a company like Amazon that's moving forward is not only looking at multiple partners on the EV side, but also on the hydrogen side. And so there's certainly an awful lot to do, for Amazon as a company in terms of moving their entire operation towards net zero. And it's going to take multiple partners.
Speaking of taking multiple partners, is anyone else into that, or is it just, you know what, I'm not going to finish that thought. Let's carry on.
So we're not surprised by an agreement like that. We are looking at, what Amazon does in their warehouses with a company like Plug Power in terms of moving towards fuel cells with their forklifts and then migrating that out onto the road with various vehicle types.
But what about Rivian shares? If you're not surprised by this and you're not surprised to see Amazon doing a bunch of different things, I mean, the Amazon partnership was what people were really counting on with Rivian. Would you buy it down 15% or did it get ahead of itself?
So we're not in print on Rivian, and so I don't want to make a recommendation on that stock here.
Excellent question dodged there from Colin. Oppenheimer doesn't have a rating on Rivian stock. They don't cover Rivian, therefore no comment, no answer. But lucky for us, Colin actually has an early version of the Neuralink implant and I can read his thoughts. So let's see what he was actually thinking after that question was asked.
Rivian, would you buy it down 15% or did it get ahead of itself?
No, Becky, I wouldn't personally be investing in Rivian stock at this time because A, I don't have brain damage. B, I'm not a gambler. I invest rather than gamble. C, production is hard. D, Rivian's done nothing yet. And C, they're probably going to go bankrupt. By the way, I wish them all the best, but good fucking luck investing in Rivian stock. Next question.
But at this point, we're really gauging sentiment around this group. And so with a bunch of these startups, you really have to watch them, begin to ramp up to get comfortable that the products are moving forward. The partnership between those companies, I think, had been signaled pretty clearly. We're not surprised by the diversity of partners that some of these larger companies need, but I think you really want to watch this market as we think rates are really dictating, what's going on with this group. We've seen a pretty healthy increase in the 10-year year to date, and we think that's really what's driving a lot of the movement in the stocks right now.
A lot of the coverage yesterday would say, okay, Rivian was down by more than 15%. Then you had companies like Fisker and Lordstown and Tesla all down by more than 2%. I don't think it's fair to really put Tesla in the same category with a lot of these new startups. Tesla seems like it has kind of proven itself, and it's going to be in a different set of category. Would you agree with that?
Good question here from Becky, but let's be honest. There's probably nobody whose brain functions adequately who would group Tesla in the same category as these EV startups who've done literally nothing yet, let alone climb the mountain of reaching volume production without going bankrupt.
Yeah, absolutely. We've watched that company go through its own teething problems as it ramped up production and really is innovating around the vehicle design, and designing for manufacturing. And we think they've proven themselves. We see that in the market cap, and we think there's a lot of learning going on industry wide that Tesla's already done.
So what does this mean for all these other new startups that are really trying to get their feet, on the ground, up and running, seeing things, when you've got the legacy players like Ford, like GM, who are coming on in a much stronger way and have, a much better set of offerings than they did when Tesla was doing this?
Yeah, it's certainly a very competitive landscape, and I want to go back to that point around the technology node transition. This is a very different way to design and make vehicles. And so for those traditional OEMs as well as these startups, it's a big change. There's a lot of talent that's coming out of those traditional OEMs, working within these startups, and it's still the same shift for each of these organizations. Some of them have legacy cultures that are really safety based that they have to fight against, as well as some of these newer companies that are really building their own cultures. And so it's not
Wait,
only
did you just say they have safety procedures that they have to fight against?
No, it's a safety-focused cultures. It's a organizational culture issue. It's not, I'm not fighting against safety.
You're not complaining about the safety. You're complaining about the bureaucracy and the way you have to move more slowly.
Without question, right? That's the issue.
Yeah.
Yeah, and so that's the issue that a lot of these organizations are working through.
This is another great point here from Colin. I think what he was getting at with the term safety regarding the culture of legacy OEMs is being extremely conservative, unwilling to take risks and to innovate, aka being scared little bitches. Let's just keep doing what we've always done because that worked in the past. Don't want to take any risks. Might lose my job if I try this and it doesn't work out. They have an anti-innovation culture. This is why a company like Tesla comes along. They invents a new thermal management system, the octo-valve heat pump, which embarrasses the entire legacy automotive industry. And then they focus on manufacturing techniques and decide to use a gigantic casting machine to cast the entire rear of the vehicle into single piece rather than hundreds, aka the gigapress. These two innovations alone in manufacturing tell you everything about the scared little bitch culture in legacy automotive manufacturers who aren't willing to take risks and aren't willing to innovate because they're scared of failure. This was such obvious low-hanging fruit. Yet it took a company like Tesla with the balls and brains to actually pull it off. For legacy automotive manufacturers to successfully transition to EVs, aka not go bankrupt trying, they will need to completely rebuild their culture. They will need new DNA as a company. From risk-averse, conservative, bureaucratic, scared little pussies to confident, ballsy, innovative disruptors. And again, just between you and I think that's a pretty tall order. One of the key reasons for this is the vast majority of talented engineers who have confidence, balls, brains, and are willing to innovate and aren't scared of failure are working for Elon Musk. And when you think about it, this makes a lot of sense. If you're a talented engineer, why would you want to go work in a bureaucratic company where red tape is going to stop you every step of the way, where your job will be at risk if you innovate, do things differently but there's failures along the way, when instead you could go work for a company that innovates for breakfast, lunch and dinner, in which the culture is so different that you will get fired for not taking the risks? Let's be honest here. 98% of the engineers working at legacy automotive manufacturers are the C, D, E and F grade players at best. Even if the culture were to change completely to one of innovation, taking risks, and getting shit done, the pool of engineering talent from which these companies have to draw from are effectively the leftovers. Let's just call a spade a spade. They're only going to get so far.
Whereas Tesla's been very, adamant and forward, forward with their customers about, sharing some of that technology and some of that safety risk, certainly around the autonomy. But I think each of these organizations have their own challenges going forward.
In terms of just overall what the limiting factors might be for this, I mean, it's still a very small part of the overall market. Something like 3% of car sales, automobile sales at this point are electric. Obviously, there's a lot of room for growth there, but the potential limiting factors just in terms of being able to get chips, in terms of able to get battery components, what is the biggest potential problem to keep them from being able to ramp up like they'd like to?
I think at this point there's, limitations around lithium supply. So Albemarle is a name that we really like here. We think lithium is going to be tight well into the back half of the decade. One of the other things that really, challenges some of these organizations is the actual vehicle design and the architecture. So the architecture for EVs ultimately can be a lot more flexible, and it's really a software-defined architecture.
This is another underrated point from Colin. A lot of people seem to be confused. They see vehicles, they've got wheels and windows. Okay, they're exactly the same thing. Surely the legacy automotive manufacturers can make these. It's not that hard. But when you look under the hood, literally everything else is different. And on top of the fact that the physical hardware itself is completely different, no internal combustion engine, you've got batteries, you've got to worry about thermal management, blah, 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 blah. In addition to that, the entire thing runs on software. They need software expertise. Software drives the vehicle, literally. Expecting legacy automotive manufacturers to become experts manufacturing electric vehicles, including the relevant software, is even more of a stretch than expecting a mechanic to become a world-class chef. Is it possible? Of course. Most people, however, are assuming that it's inevitable. They make cars. Obviously, EVs are cars. Duh, it's not that hard, right? Yes, it is that hard. It's completely different under the hood. This is why I use the analogy of changing professions and becoming world-class, because if you don't, you go bankrupt. This is one of the most underrated points that people don't seem to appreciate. If they did, stocks like Ford and GM wouldn't be up 50, 100+% over the last year. As I've said a million times, the bell curve is real.
So a company like Aptiv, ticker APTV, is a name that we love here as a real leader in terms of vehicle architecture and enabling next generation architectures. And so those are the two areas that we're really focused on in terms of limiting factors and enablers for some of these larger companies on the OEM side that are really going through this technology transition.
What are your favorite names, either among the new startups or among the legacy guys that are doing this?
The names that we're pushing right now really are those two names that we just talked about. As we have this rotation out of secular growth into more cyclical growth, some of these established companies that do have important technologies and resources to bring to the bear, a company like Albemarle that we think can actually continue to raise prices on lithium and is really leading a lot of the concentration, formulations for batteries. On the lithium side is a great play here. We think there's upside in numbers. Same thing for Aptiv. They're continuing to book an awful lot of business around these operating systems and enabling the transition into EVs and AVs. And we think they continue to grow above market, double digits for a number of years here.
So, hope you guys and girls have enjoyed this video. I'm going to keep banging the drum on Tesla stock. Shouldn't be this cheap. It is. A couple of months time, couple of years time, we're going to look back and go, holy shit, that was the bargain of the century. You can count on it. And I've got to give a lot of credit to Colin Rush from Oppenheimer. He's a super smart analyst and really understands the dynamics of what's happening with the transition to EVs, although he's a little bit understated on some of his points. Meanwhile, this guy, they're all fucked, they're going bankrupt, blah, 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 but we're on the same page. As Colin said, 2022 is the year of execution when it comes to the electric vehicle space. We finally get to see a bunch of these EV startups and legacy automotive manufacturers who up to this point have been doing a whole lot of talking finally begin to walk or crawl or trip over at the starting line, break their leg, cry for their mummy and quit. We'll see what happens. Thanks for tuning in, and can you believe it? I didn't even plug my Patreon page once. Wait, does this count? No, this doesn't count because I didn't tell you about my 100+ exclusive Q&A videos and access to my Tesla price targets over the next 10 years, and I didn't tell you to click the card in the corner or the link in the pinned comment to join Patreon if you haven't already. See you guys in the next video. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.